What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to take a look at Tesla's chart. We're going to look at where price came from last week, where price ended on Friday, and where price is likely to head over the next week or so. Before we get into it, don't forget to check the description below. There's a link to Traders Helping Traders Discord where I'm hanging out during market hours. There's a link to the merchandise shop where you can support Rawstocks by buying some of the merchandise, and there's a link to my socials as well down there. If you have any questions, go ahead and hit me up. Also offering one-on-one mentorships, and you can find me again by finding me on my socials if you want to inquire about those one-on-one mentorships. So let's dig into the charts, right? So last week, it more or less was just a face ripper. We had FOMC. We had a lot of positivity in the market. If you looked at SPY, you looked at QQQ, all of those were just ripping. Same thing with Tesla, just shredded, right? 1, 2, 3, 4 days after we had a large, wide range on Monday. If you watch this channel regularly, on Tuesday we were looking for manipulation. We called that manipulation. We got that little quick move to steal the stops on the downside. And after that, we got distribution on Wednesday, Thursday, and we even got a little distribution on Friday. Friday is a bonus day. We don't look for distribution on Friday so much. It's more of a reset. But if you look at this move here, all the way down and up, we kind of balanced out that entire range right here before the gap. We fell short a little bit of hitting that wick from Thursday, October 19th. But if we're looking at this move here minus the gap, we more or less balanced it out. So that Friday reset day, in my opinion, was more or less to balance this out. Now, if we look at some trend lines that have developed, we have a resistance trend line from these peaks up here. We're nowhere near hitting that right now. We now also have a resistance trend line on the bottom. Which is a little off there, but let's see. There we go. We have a resistance trend line off the bottom where we have this bottom here, and we rallied off of that. So that gives us a strong support level as far as the kind of bearish wedges type of pattern that we're developing, right? Because this has a more intense or rapid decrease. This one's a little bit more subtle, so this is a wedge pattern right here. We also have from low here to low here, we have a new bullish trend line as well. So we will be watching to see, do we reject this? I drew this one here. It's from a bottom and a top, but it could offer some resistance there before we potentially head up higher into that wedge. So I'm going to be watching this resistance line here. But do we see this come back down, right, and test this trend line again, hold the support, rally up to this resistance line here? That's totally possible. You guys can see I have the magnet sitting here inside this gap, also here with this wick low. So what I'm looking at with this price potentially only coming up to this level right here is that I'm looking at an Elliott wave count, and we're in a large, what appears to be a corrective move, A, B, and now we're in a C wave. And a C wave is typically 5 waves itself. So the way ABC patterns work out, if this is a corrective wave, is that A wave is usually 3 waves. So we got kind of a 1, 2, 3. Okay, and then we have a 1, 2, 3. B waves are usually 3 waves as well. And then C wave is usually 5 waves. So we have a 1, 2, 3, 4, and then 5. And if Elliott holds true in this, and that's what is actually going on, wave 4 should not peak the bottom of wave 1. So that's why I have that level drawn out there. I have our magnet drawing us into this gap potentially, and this resistance line here. And I'm looking for us to not trade above 234.50, let's say, just right about there. If we do get up there and we cross over that level and go deep into it, violate that level, then that wave count is probably going to be off, and we will reassess what that wave count looks like. But I am looking for a high no higher than 234.50-ish right now, as we potentially pull up into this gap and then trade lower. But I do really think that we might see, that we might not actually take the 230 level right here. I think we might hit this resistance line on Monday and then start to sell off there. So we are, again, Monday looking for consolidation or accumulation. It could be wide range, it could be small range. Tuesday, we're looking for manipulation. Okay, so maybe we get a nice wide range candle here on Monday. We just spike above it, but don't come up, through this 234, 235 area that I'm watching. Maybe we just see a spike above manipulation, and then we get some downside distribution. So we'll be watching to see if that happens. Again, we have our big daily fair value gap down here, and we have a larger, higher time frame golden zone or optimal trade entry with our fib levels down here as well. So I do think we are eventually going to pull down in there, but we do have a lot of symmetrical triangles kind of setting up, and a lot of different, triangle patterns. The wedge, this larger symmetrical triangle here. So I do think we're going to be stuck probably inside of here for a little bit. Again, kind of consolidating, right? If we push up, do we push down? Maybe we, don't catch all the way down back into this line acts as support again. We bounce up and then find ourselves more towards the end of the year, making either a breakout or a breakdown. Seasonality does suggest that we should have a decent November and December, right? So again, if we do pull back down, and again, if this was a third wave of a C wave, we have 4, then we want to see 5 come back down below 194, 190, 193, 194, back into this daily fair value gap. And that could happen quickly and rapidly. It doesn't have to, it doesn't have to happen rapidly and quickly. We could just kind of dink around and then drop down. So again, we'll be watching that. Did not quite hit the consequent encroachment of the daily fair value gap. So I have the eyeball here. We're watching this area. I do think magnet, right, is pulling us into this gap. I don't think we're going to close it right now. I just think we're being pulled up into it. I think there's a lot of hoopla over the FOMC. And I think that we're going to get sold off onto again, because currently we are in a market maker sell model. There's no confirmation that the market maker buy model or the market maker sell model has changed and that we've moved to a market maker buy model. Just because we rallied on a short term, we are still in market maker sell. This move here is an optimal trade entry, and this move here is an optimal trade entry. Both of those are bearish indicators that we're hitting those wave ones on an optimal trade entry perfectly. Okay, that's market maker sell model. We are selling off. This is a rally. It should get sold off on. How quickly, we don't know yet. That's why we're looking at our levels and we're looking at our trend lines. So if we want to drop down into, I'm not going to do all the time frames. If we want to drop down, we can obviously see, back on Tuesday, was it? We got that, run on the stops. Where is it? Tuesday. Here we go. Right. We had our Monday trading. We ran the stops on Tuesday. We called it out in the video. We called it out on Monday, actually saying looking for the manipulation. We got it. We ran on stops. We distributed to the upside. And then since then, we've kind of just traded down. So here's Friday. Okay. And let's measure this just to see what the fib level is. I bet it's pretty darn close to an optimal trade entry. Okay. This is back in September. Oh, because this is the 1 hour chart. So we've already identified that. And we've already identified this one here as optimal trade entry. So what we're actually looking at is back here for just this week. And we're looking at, here we go, Monday, Tuesday. Here's the stop that we called, right? There was a low here on Monday, ran the stop, rallied up. And we're just getting a rally, it's just a regular rally in a downtrend. It just happened to be catapulted by the FOMC meeting. So if we were to look at like our order block here, right, or even just our liquidity wick, you can see we drew up into the liquidity that's inside that wick. So standard, garden variety stuff. Just pulling up into where liquidity is, right? We know that liquidity is also in this little gap here. When price gaps, orders can't be filled, so we come back to fill those orders. Whether we close it doesn't mean we will, doesn't mean we won't, but there is liquidity that rests there. And so we'll just see what happens. It was really bullish. Again, mid and late in the week, even on Friday, we saw a nice push up, but then we sold off there. Kind of have a bull flag looking thing. Again, I do think we're going to pump up and take the rest of the liquidity that's at least in this wick, if not some of it in this gap. Here's that level I was talking about, 234.50-ish, right here, low here. I don't want to see us cross over that. It's going to invalidate the Elliott wave, and then at that point we could go higher. Because of how much we moved here, it would be likely to say that we're going to see a pullback probably into this gap, But does that happen early next week? I'm not sure. If it happens early first, if the first thing we do out of the gate, we get the pullback into this, I think that there's a possibility we could rally higher from there, and we might break this, and then that Elliott count is off the table, and that's totally fine. But if we come back down first, I do expect that the move is going to be to the upside. Okay, if we start rallying Monday, maybe even into Tuesday, and we start getting into this gap, right, and even pushing at this level here, I think from there we're going to sell off and come back down into this fair value gap. So a little bit of speculation. It's just more or less, do we see the move to the downside first, or do we see the move to the upside first? I don't think we're just going to get a straight dump. I think it's going to be a little bit harder than that. We did see a lot of toying with the 200 range, right? Drop it below, run a test, run it up, come back down and test. Right, a lot of people who were bearish were saying it's not going to hold. It's not going to hold. 200 level isn't important. Obviously, it is. It cleared it, got above, ran above, back up into liquidity. Okay, there were a lot of levels in these highs here, in this high here. Okay, we've taken all of that. We gapped it here. Never came back to test it. So again, looking for the first move of the week. Are we coming back down into the gap here, or are we pushing up higher? So you got your levels on the table. 15-minute chart, again, same kind of stuff. We'll just blow it up a little bit bigger. All right, our manipulation wick on this Tuesday, we were looking for it. If you caught it, great. We called out a bunch of calls Tuesday, Wednesday, Thursday. We were running up calls, making money in the rooms. So if you caught it, great. I was out before Friday. I got out on the swing calls Friday morning at open, and then didn't allow it to run any higher than that. I did get in some puts at the end of the week, right before close. Took some puts, so we'll see if we get an early sell down. Monday often has been giving us a pretty nice range, so I do anticipate I'll get an opportunity to sell those for some profit. But we'll see what happens. Again, we're not too far off of that resistance line. We didn't quite hit it here, so I do think it'd be logical to say we might come back up and hit that. Again, we have a level here. This is where our gap starts. Up here is where that low of potentially wave one is. Okay, and so that's all I'm going to look at today. I am going to do a video a little bit later on setting up your key levels and how to set up a chart. But I hope this has been helpful. Good luck to you guys. I'll see some of you guys in the Discord room again during market hours. We'll still be providing call outs. Most of the call outs go to the premium section. But some of them go to the free section as well. So if you're not a member of the Traders Helping Traders Discord, jump in, even if it's for free. There's a lot of fun happening in those rooms, and we have a really good time. So again, good luck. Look forward to hearing from some of you guys this week, and I'll talk to you later.